weekly candle close came in, and this is where the Bitcoin dominance closed the week. It came back to a long-term trend line support and showed you a inverted hammer. That kind of gets a lot of attention because historically speaking, something brews in at that time. Now, this is a total crypto market, and total crypto market argues that such a candle, whether it be hammer, inverted hammer at the bottom, or hanging man at the top, matters. The question is, how much are we going to drop? Is it just going to be a 20%, 25% drop, or is it going to be a 30 to 40% drop? Now, in Bitcoin terms, that's substantial. In some altcoins, it may look like a small correction. But alt market is where we ask that question for altcoins. And alt market argues it has formed a doji which looks like a hanging man with the lower shadow extending to the downside. Now, if you have seen the past and where these kind of candles have come in, you kind of have an idea. Okay, the top was already in. It then lured in some more people, pushing the price a little bit upside, and then immediately came back down. Question is how much high the price went and how much the price dropped. So from there, the price actually went up around 2 to 3% on the weekly and then dropped 30% first leg and then continued for a 40% drop. And that was in the middle of a cycle where you just started the new bull market season. Whereas if you look at the top formation areas, you have one in this region, which is back in May 2021. Total 3 showed you the exact similar candle, and then the price dropped. But after that, it continued to the upside, formed another one here. So what decided whether the next candle we're going down or not compared to the candles formed in October to that of the November? The very next candle which showed a continuation to that doji candle formation. So right now, yes, you kind of got what you actually wanted, but 65%. The next weekly candle, if it can close anyway in red, it is going to reassure that the thought process which you were arguing is going to be true, and at least a small correction is going to come. Now, on total market of alts, it shows at least a 23 to 25% in general, which would mean some assets may drop 30 to 40, some may drop 20, 25. So here we are watching these. Let's pick them up individually. Say this is Cardano. Cardano on a weekly shows you this. And that means what? A long standing resistance starting from November 2024, and it is still active. Now the price is still inside a bull flag if you want to argue so, but you can actually monitor the impact if it can come back down to test the support before it goes back up, which would make a lot of sense on the long-term trend line. It is still bullish when it actually come back down to that low. But a 50% drop in price to that region brings you back to November 2024. That was also a region to buy at the long-term support region. But if it comes there, yes, you can go bullish. You can actually buy, but if it doesn't, that's a different story. If it breaks that, that is the toughest question. Now, we don't know whether it's going to break to the downside or not. But as of now, what you can look at is long-term signals. Say, this is ETH on a weekly. You watch what the candles show you. You had one candle in here. That was an inverted hammer or hanging man, December the 9th. Yeah. And then the very next candle, the price started dropping. But then you had another candle in here where you had another leg up. What's the difference there? Both regions showed you negative divergence. Both regions showed you there is a MACD cross coming very close to the downside. The RSI gives you all the ideas you actually want to look at. When the RSI enters this region, it kind of gives you some shaky moves. And when it gets rejected harder, it goes lower. Now, put it on a monthly to get a bit more perspective, or even quarterly would work. This is where you are. Your long-term resistance region is up to 4200, right? And you're getting very close. Now, on a monthly, you are watching that the MACD is trying to cross back to the upside. It has not yet crossed. But then the argument is, when you are crossing to the upside, you may first come down a little bit and then continue back to the upside. So, first question is, when you plot that long-term trend line, if you want to say the price is going to come back down and then go back up, that's close to 50% drop, and that's like coming back to $2,000. Now, when Bitcoin continues that action, this is where most of the questions end. You have the long-term trend line on the RSI region, and that gives you the idea you have a tiny bit more space there, and that should be hitting the resistance. Now watch the weekly. The weekly chart already argues you something which is kind of clear for the weekly chart. When you do plot that, you are almost at that resistance, and you're trying to form a momentum-based negative divergence. You already have price-based, swing-based negative divergence with these highs, swing highs, price going up, RSI going down, and then at this point, MACD starts agreeing with the RSI, not the price. That kind of shows you there is going to be a lot of volatility ahead of time. Watch these assets. Say you pick up Doge, it bounced off, and now on a shorter horizon, if you zoom in and look, you can see the fact that the price actually bounced up, but then it came back down to test a region. Maybe a 4 to 12 hour would be better here. Yeah, you can watch this. The swings here, that was a support, then that turned into a resistance. Right now, the market is testing it as a support. But if you do the A, B, C, and go down to test the trend line, then that region activates something else, which is a fake out region. Then your bottom becomes the bottom of the accumulation range. Now, we have seen that multiple times. It's not like, this is the first time we are watching that. You've gone up, you've come back down, you've gone up, you've come back down, and come back down to what level? The trend line. Yeah. So there is a possibility that, okay, maybe it may drop not too much. It may only drop 35%. Good. Now, that is based on its own price history. Now you have a long-term trend line which is valid in the same asset. If it is to come back down to that trend line, at that point you can argue it is again going to be a 45 to 50% correction. Now all of this is based on that asset's own price history in the accumulation region. Now, come back to the Bitcoin dominance. This is going to be interesting because when you actually zoom into what exactly is happening, you're watching the price again pushing down, the dominance pushing down. Now, have we seen some of these before? This is where you go to daily chart and you kind of get this. This thing which you're watching right now on a daily is almost exactly similar to what you're watching right now. So back in December 2024, when it formed, Bitcoin kind of pushed up, it kind of tested its highs, it put in new highs. Altcoins slowed down, that made the top, altcoins started dropping. Now we are repeating something similar on a 3-day chart. This is very interesting because it's on a 3-day chart. So the impact should be bigger than what happened with respect to a daily chart. Now, XRP is again a lot of XRP generates a lot of questions. So here we are picking up at least on a 3-day, weekly, monthly, whichever you like. That's actually okay. Now watch the price. It clearly formed a 3-day negative divergence without a doubt. Good. Now it formed a weekly negative divergence. The price put in a higher high and then closed a candle on a weekly, and then the RSI did not agree with that. Now the monthly candle close is coming. We're very close to that. So you're zooming to this region, and if you close anywhere in here, what does that mean? Price going up, but the RSI does not agree with that wherever you close. So that thing is going to come in few days, not few weeks, not few months. It's a monthly candle, and that's going to activate in itself. So if you have a daily, 3-day, weekly, monthly negative divergence, what should it look like? Something like this. We've seen this before. This is Solana. It formed the negative divergence in here in Jan. But then, yes, the price, that only dropped to the downside in Feb. But that was pretty huge and hard. That generated a long wick to the upside, killing a lot of shorts, highly levered shorts, and then dropped. So if you measure it without that long wick, say you entered before the long wick, no one knew how big the wick is going to be, that's a 62% drop. Now say you are one lucky guy who dollar cost averaged into that, you made 70%. Now, not much of a difference. You get that? 68% if you've averaged up, if not 60. I mean, that's still a very decent ROI. And why did that happen? There was a daily, 3-day, weekly, and monthly negative divergence. These are the things which you have to pay attention to. Now, with that being said, watch the total crypto market. If the total crypto market is about to go back down, then in picking individual assets which may go up is going to be a substantial risk. Whether the weekly agrees, whether the 3-day agrees, whether the daily agrees, you are going to watch a lot of these things play out. And some of us may not like what the price action is doing. But if it is about to do that, then acting for that would make way more sense than acting against it. So if you received value, smash the like button. And if you want to follow the group, jump in here using the link in the description. Make sure you are in the SI family to get the most informed charts. Bye for now.